recording is going. So Randy asked if we could kind of go through the whole setup over the last couple weeks of what we've done in ZS. Okay, so back on the 27th of June, and I'll show you some charts here, Charlie Moon had sent out a signal. His indicators gave a buy signal in ZS, and Mike Shore and I had a very similar type of signal here. So if we look, try and isolate this here. Okay, so first off, what's the first real good trend line that you see here in ZS? Okay, in terms of just a technical indicator. Okay, higher highs, higher lows. I could definitely go with that, and you know, you can see that by low, 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 you know, so on the way up, and the highs getting higher. Okay, yeah, and how about yeah, the real easy one, above the red line, exactly, above the 50-day moving average. So over the last, since right here, so basically since December, so 7 months, this 50-day moving average has held as incredible support, right? So when we got this little pullback, okay, so right here we came down on the 25th. Didn't quite touch the 50-day, but it was getting close there, where we knew we were getting set up. Okay, that was actually our tip-off. Our signal didn't go out till a day later, but that was our tip-off. Okay, and when we started to see from there, okay, do you see the where it closed here? That's this little guy right here. So the low of the day was 73.05. The little jagged line here is where it closed. That's 73.82. Okay, everybody see that? So the low of the day on the 25th was 73.05. It closed at 73.82. That's a tip-off that, okay, got close down to the 50-day. There's buyers coming in. Let's see what happens here. And then the next day, we got a nice, just a tight range. You can see not a lot of bars there, a nice tight range. And we actually closed a little bit higher. We closed, the low was 73.90. So the low of the day was actually above the close of the prior day. And we closed just moderately higher, 74.30. That is a very bullish signal. So coming off of the support area there, and then seeing a close higher than the previous day. Okay? Same would hold if we were below a 50 or a 200-day moving average and we were looking for a downward move. So if that resistance held here, the support held. Okay? So that's where we put the signal out. That was a clear signal to us that there was some definitive support there. Now, Charlie put out a buy signal on stock. Obviously, that's what he does. Mike put out a signal just to buy a straight bullish vertical call spread. My signal for our room was a little bit different. My signal was also bullish, but it was taking into consideration how low volatility was at the time, implied volatility. Okay, which, if you look at the bottom of this TOS chart right here, and you look at the red line down here, the red line is implied volatility, the blue line is the actual stock volatility, but we really want to watch the red line or implied volatility. You can see it's pretty bottom of the barrel. Okay, and in fact, if you look over here at this chart, which really breaks down implied vol, okay, again, really, really bottom of the barrel here. Okay, so I wanted an opportunity to take advantage not only of a bullish upside move, but also to take advantage of inexpensive, cheap implied volatility. So what do? We bought a call calendar spread. Upside exposure and also volatility exposure by getting long Vega. So what we did, the day we sent the signal out, and I'll pull that in here, okay, here's the actual signal, okay, was to buy this call calendar spread for 95 cents or less. Now, why would we have chosen the 82 strike? Exactly. That was the expected move. That was the expected move at the time, going out to going out to July 5th expiration was 82. So the best thing to do then was do the 82 calendar. Okay, so this way we're taking advantage of the directional delta move to the upside. And it gave us the opportunity to do what? Well, not only get long delta, but it gave us the flexibility, right, to roll a position out, collect more premium if we wanted. That's one of the beauties of a calendar spread, especially when it's a calendar spread that's not involving an event, like an earnings event, right, where we just put a trade on for one day. Okay, so now let's fast forward. And Randy, are you okay? Okay, so we put this spread on. Okay, stock was exactly at 76.31 when we bought this. Okay. We let it simmer a little bit, let it simmer. Stock rallied. Obviously, 82 was going to be perfect, right? We always want stock to move to our short strike. And last week, when we got to like Tuesday, Wednesday, we said, okay, it's sitting here beautifully. It's sitting in the 80, 81 range. We're starting to collect the premium from our short premium while we're getting the long delta to work for us on the long side. And then we got to Friday. Actually, to Thursday. No, Thursday there was no, we were off. Okay, so Friday. And actually, we had sent this out late in the day on Wednesday, but this was the reminder that went out on Friday. We could have just closed the calendar spread. Okay, I think we bought it for 95. The calendar spread was trading about $1.75, $1.80, something like that. Perfect trade. Perfect trade. However, after analyzing ZS and looking at this kind of bullish breakout move that it made, we decided to roll out our short option into a long vertical bull call spread. Excuse me. So what we did, as you can see on the board here, we bought back our short option. We bought back the option that was expiring last Friday. And then we sold the 85 strike call of our long expiration. So as you can see at the bottom of the signal here, if we filled, which we did, it left us with the July 82-85 bull vertical call spread, $3 wide call spread, for a total cost of what? What was our total cost? Bingo. Yes, we originally paid 95. We collected 85. Some even got a little bit more. So we were now in this $3 wide bull vertical call spread for 10 cents. Okay? Almost, I mean, this is when I talked about earlier, looking at something or being in the position of strength. This is being in a position of strength. You've got a $3 wide spread that's almost in the money, okay, that we paid a dime for. So what did we do? This morning, we sold half. It was trading at $1.50, so we sold half. Why wouldn't we, right? Why wouldn't we take some of that off the table? Okay, so we sold half of our position for $1.50 after effectively being in for 10 cents. And we have a stop exit in for the balance. And as we've talked about, we'll try and continue to ride this thing higher and higher and higher. But at a worst case scenario, we are locked in, right? We are locked in case the stock drops down. No one can ever take away the big, massive win on this. Randy, we didn't have a 628 option. The original was short the July 5th and long the July 19th. That was the original trade. It was originally sent out on the 27th and then revalidated, as you can see here, hang on the 28th. We revalidated the signal on the 28th. Okay? And Randy, that's kind of the breakdown. But didn't the signal on 7.5 close it out? It closed out half the position, right? It closed out our short option. Let me put this back on here. Let me bring the actual signal back up here. Okay, what does this say here? No, yeah, it's David, there's nothing to do new in ZS right now. No, if you're not in this. Okay? Randy, this says buy closing the July 5th option. But then sell opening the 85 strike call July 19th. So that's why this was an adjustment or a roll to what we had in our original position. So we closed out one end, but opened up a new option on the 85 strike. Does that make sense, Randy? I don't want you to just say okay if it doesn't make sense to you. No, Randy, what was the original trade? The original call calendar signal was what? Both the same strikes. Both 82. Selling one, buying the other. Okay? Does that help clear things up a bit? Gotcha. Okay. Gotcha. And now we just have a long bull call spread in ZS that we have a stop exit out there. If we get stopped out, we get stopped out. We move on. Okay, let me wrap this up and I'll get the video posted up here. Be right back, everyone. What looks like, Connie? Okay, so if I pull up right here, here's my stop. Okay, here's my order. It's half of my position. It's actually, excuse me, the balance of my position. We've already taken half off for $1.20 stop. And as you can see here, it's not a live working order yet because it's a stop order. So that's why it says wait stop. But this is what the order looks like if that's what you're looking for. Is that what you were looking for? Beautiful.